Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi and welcome to StockInvest.us podcast for week 49. It's only a few weeks left till Christmas, and will these weeks be green? For weeks and weeks you heard me being very negative to the market, and last week was no exception. Nasdaq went down minus 2.7%, but more important, I told you last week with only 14% buy signals at Nasdaq, it would be a very volatile week. I gave you some trading tips because usually volatile is where you can make very good money, but you have to trade accordingly. Don't sit overnight was one of the few tips, and hopefully you made some good cash because it was a roller coaster last week. My name is Jim Strömberg, and I am one of the co-founders of StockInvest.us, and for the next some 40 minutes I will be guiding you through what I expect is the result of the coming week. How will this week's market be? Then I will do a few major tech analysis. I do this simply because that will reflect market somewhat. It's Apple, Microsoft and Tesla fell on Friday but still holding strong. I will dip by Bitcoin and Dogecoin, and last week my predictions was very far off. As you know, the crypto had a heavy fall this weekend. Is there any buying opportunities? Have things changed in the chart? I will let you know what I think. For the very last part of the podcast, I will give an insight into some trading tips. For the week, we'll look at the trading tips that I gave last week. How are we doing? And I can tell you straight away, it will not be the best results. Finally, I will let you into the high-risk portfolio, which we've been following for a very, very long time. And last week, something nice happened to Arbutus. Been waiting for it. Arbutus went on a crazy rally and is now out of the portfolio after a very good gain. But we will get there shortly. As usual, we will start with the markets. As expected, last week became very volatile. Up one day, down the other. But the end of the week, the Friday, took also me by a little bit surprise. The job numbers came in much worse than expected, and you can of course speculate how accurate are these weekly job numbers when the monthly came so off. But this in combination with the Omicron virus spreading had that mix causing a huge fall on Friday. Nasdaq ending at 15,085 points, just above the 15,000 level, down 2.63% last week. And the question is, well, will the 15,000 limit hold, or will it break and will we have another fall down to 14,000? We will look into the charts very shortly. Dow Jones ending the week at 34,899 points was only down 0.91%, so a little bit better for Dow Jones. And what can we expect for the week ahead of us? Well, usually we do like this. We'll look at some fundamental things, some overview things, then have a quick check at the chart to see if these things match up. And what is it that we can expect for this week? Well, oil is more or less unchanged, was down $3 since last week, currently trading around 68, so nothing special going in for oil. Gold is trading at 1,780. It's down $20 since last week, or about 1%. So nothing special. More important is the 10-year Treasury yield, which is down to 134. And again, this was based on Fed decisions. However, I don't understand how the Treasury yield can be this low when we know that inflation is here to stay and probably just get worse. Yes, oil is a little bit down. It was due to the release of the emergency reserves in the United States. It's also due to the fact that OPEC is ramping up throughput production. But in general, it should not be enough to prevent inflation from continuing. And this week we'll know a little bit about inflation because we will have some numbers on Friday. Should be the consumer price index numbers will come in on Friday, and that will give a few ideas. It's expected that November will come in at around 0.7% increase with a year all overall by 6.7%. And for us following this a little bit more closely than the common man in the street, well, some time ago, 5% was said to be very high. Now, 6%, 6.7%, almost 7%. Yeah, it's okay, but it's really not okay because all these things are hitting the consumer. It's just a delay. And at some point, it's going to reduce the buying power. And reducing the buying power will, of course, go for the factories and the business in general. Where will we save? Will we be saving subscription in Netflix? Will we be reducing our amount of Microsoft subscriptions? Buying less Microsoft products? We don't know yet, but it will be up there unless things change in a very special way. And on Thursday, there will be job numbers again, weekly job numbers. Nothing special, I think, but since numbers are coming in a bit off than expected, it's of course something to follow. I would say again, Friday is the more exciting day for the week. On a side note, I can mention that GameStop will have earnings releases on Wednesday, and so many traders are into this meme stock, especially AMC. And I think that numbers for GameStop could affect what will happen with AMC. So if you're an AMC trader, I recommend you pay attention to Wednesday and GameStop numbers. Because in my opinion, these should to some degree affect the trading in AMC, especially if they come in very positive. I think that we can see a rebound in AMC. At StockInvest.us, we analyze more than 32,000 tickers. We rank them as buy, sell, or hold candidates. We give them a score, and based on this, we have a lot of data. Right now, only 14% across all the tickers that we analyze across the world is giving buy signals. The same thing like last week. But if you look at Nasdaq, only 9% is giving buy signals. And usually this is a golden buying opportunity. It's just where you want to put all your cash into the market because there should be a rebound. At the same time, I was telling you all this many weeks ago, and so many times during all these podcasts, when market was very high, when I was telling you about 50% buy signals, when markets are too high, they can just go higher like they did. It's the same thing when it's oversold. I said that last week, that it can go even worse because there is a huge scare in the market, and that can easily turn into that panic where you have a 3% fall, even more percent fall in the market. And that is my huge dilemma this week, like it was last week, is what will happen? Will we have this bounce up or will we fall? If we talk further ahead, I am pretty sure that market should continue downwards. But for this week, again, it will be such a hard call. What is pretty sure to me, like I said last week, it will be a volatile week, and this is a trader's dream. And just let me do a quick recap on that. Why is it so good? Well, if markets really jump up and down, there is many trading opportunities that you can do. I told you a little bit last week. Let's quickly continue a bit on that. Of course, if it's a green day, you don't want to sit till next day. So usually you'd like to get out by the end of the trading day. You usually also cap your trading period shorter, meaning that you are looking for much shorter investment. Could only be for a few hours, for a day, in the worst case, a few days. And you try to plan it, because if markets do fall 2-3% one day, it's a huge chance that they will go up the next day. If it gets red, at least you get a good buying opportunity. So if you are planning to invest, most people do this thing. They do not buy when it's red. They get totally scared. They sell. When it's a green day, they buy just to see that the markets go down. So let's take an example. Sumerica is now trading around 33 cents after Huge fall on Friday. Normally, Friday was a very good buying opportunity, indicating that at least the beginning of today would be a green day. So buying on the red, selling on the green, meaning that there should be a trading opportunity. How this day will play out, knowing that last week was ending red, sometimes means that you can get a good buying opportunity in the early hours of the trading. So if you're planning to trade, my guess is that it could be some good buying opportunities. We'll get back to the trading tips. I have one stock which I think can do a very nice rebound this week, and you should try to trade it early in the week. We'll get back to that. But the idea is that you expect volatility, you expect the markets to go much up and down. And when markets are very red, stocks get sold further down than they theoretically should. And usually that gives that nice rebounds. Overall, my trading years, this is the market where I do my very best trades, when I manage to get into that mood, utilizing the red days and the green days and the volatility. You can read more about it. There is lots of very nice literature. And even at StockInvest.us, you can just register. It's free. Go to your profile and you can start read chapters from my book, How to Lose Money When Trading. There you will be presented to some of the things which I say right now. But we will try to figure out what will be the part of the week. So we know that at the end of the week, Friday will be some numbers again, which could flip the market. And of course, there is the Thursday numbers. For the rest of the week, I think it will follow the classical pattern. I told you, be aware of this Ukraine conflict. Latest news now indicate that Russia is preparing something for early January. But these are speculations, but it's very nice, or very good, not nice, but very good to keep an eye on these big macro things, because they will somewhat set the tone as well. And there is a lot of very strange movements in the market now, not only in crypto, but we see money flowing in many different directions right now. And usually, and especially if you go back to I think it was the first or the second podcast, I told you something about how money flows, and you like to follow the money. You try to figure out where is the money flowing now. I've been telling you that I believe it will flow into gold, that gold will get to 2,000 before Christmas. Only got a few weeks left on that target, and 2,500 by 12 months. So I think that we will see money flow into more secure items. But in general, you want to shape an idea, because that will give you a better long-term trading results. And is it green technology? Where is the money flowing? Try to figure it out. Follow the main news. See what moves, so it doesn't take you by surprise. We will quickly look at the chart. As we can see, the markets as such, I don't find any huge reason. I forgot to mention that New York Stock Exchange, 12% buy signals, Frankfurt 19%, more or less the same. Tokyo very low, 13%, and Shenzhen China is 36%, so it's a bit opposite in China. But in general, the numbers are more or less the same like last week, except Nasdaq, which fell harder and created more sell signals than the other. And if we go to our webpage, StockInvest.us, we type in the ticker Exig, we will get the Nasdaq chart. And as you can see, as I told you last week, when things are in the top of the trend, you can expect it to fall to the bottom of the trend. I said a very good support at 15,200 would probably be where it bounces up. That was my very low target last week, so it broke even lower than 15,200 due to the Friday scare. And if we look at the chart, we are at the bottom of the chart. Volume is following the market somewhat. I like that. I told you many times. I like that. Usually means that we should see a bounce up. Right now, it's at the very bottom of the trend. At the same time, hitting 15,000 point, which is support. So for the first part of the week, it's a fair chance that it would bounce up. The problem now is there is a death cross for the moving averages, where the short-term moving average is going below the long-term moving averages. You go to StockInvest.us, you look at the chart, Exig chart, type in Nasdaq or Exig, you will see what I mean. It's a huge sell signal from moving averages. Last time it was a buy signal. That was, let me see, it was back in around October 20th. It gave buy signals from the same signal, had very nice movement upwards from 14,800 to 16,000, now creating that huge sell signal. And given these things and the bit more long-term picture, well, this is the most likely scenario. We will have a bounce up. So hard to say if it's only will be 15,200 or it will bounce up to these moving average lines somewhere around 15,400, 600 and then fall back. All in all, this tells me that you should expect a bounce up for the first part of the week, where the last part of the week again will turn red, and that we will see Nasdaq challenging this rising trend and most likely will break it. Up first part of the week, down the last part of the week. Doesn't look to me like it will be too huge changes. Of course, it will be volatile, as I just said, up and down. But it doesn't look to me like it will be extremely scary. But if 15,000 is broken, by some sort of margin, could happen today for some reason, that only 9% buy signals mean people are already on the edge, they're already on the trigger. Some have to cover different options they bought. Things can easily get out of control on this point, and then it doesn't matter what I say or what the chart looks like, because it can fall very fast. And if it breaks 15,000, there is really no support until 14,400. Find some support at 14,800, 600, etc., but there is really no good support before 14,400. So keep that in mind. There is a huge chance that we can get a very rapid hard fall, but I think that will have to be triggered today or tomorrow. If markets pushes upwards for the beginning, I think that we will see this scenario where it starts good for the first part of the week and then go down. Of course, there is a fair chance that it could be a green week every single day, since been so many red weeks in a row. But my guess is that we will have this red week, this week where it starts green and red. I will just say that I believe by the end of the week we will see the market somewhere close to where they are today, meaning just above 15,000 points. And if it was possible to say neutral week ending just on the very same, I would say so. But I will again say that it's will be a red week, but not by much. So that's the market forecast for Nasdaq. We will soon look into some of the major stocks. So let us just quickly do a recap. Thursday will be job numbers. Friday will be consumer price index numbers. These are numbers that you should watch. They can or should affect the markets. We know markets are very scared. It's only, as I said, 9% buy signals at Nasdaq. It's only 14% buy signals across the world, meaning that there is more sell than there is buy signals, and people are really scared. This can push the markets down. So be prepared for it, that it can get very, very bad very fast. But we'll be a little bit optimistic now this week, given the fact that there is only there is some support at 15,000 points on Nasdaq. It's a fair chance that at least the beginning of the week will be good. And that will bring us straight to the major stocks. We'll do them very fast. It will be Apple, Microsoft, Tesla, Bitcoin, Dogecoin. And at the very end, we will look at some trading tips and the portfolio. But first, the tech analysis. Last week I was negative to all the major stocks, expecting them to fall. I had a bit unrealistic target for Apple. I told you so that it was unrealistic at 146, but it was just to show the direction. Apple did much better than that, ending at 161.84. But if we look at the Apple chart, we can see that the stock is in the, still in the top of the trend, but it bounced down as it should. The very high relative strength index, which I told you were a sell signal, became a sell signal, as it should, and the stock fell. But it didn't fall very much, only a few dollars. And now the interesting thing is that with some support at 160, volume following the stock, and as you know, I like it when volume is following the stock. Apple fell the last few days last week, but the volume also fell. And I like that. I simply just like that. That's what it should be. It makes it much more easy to predict. And how can you read this? Well, volume is going up, volume is going down. Well, it's very simple. Not so many people were interested in selling their Apple share, which is, of course, a good sign. It will be much worse if it was the opposite, that a lot of people were selling their shares and you had an increase in volume. So you had this divergence that we do not want to see. That we want to see exactly what we see. We want to see volume following the stock down. That gives the opening that the stock may very well turn where it is now, finding some support from accumulated volume at 160, pushing upwards. There is only a little bit resistance at 165, and it can just push upwards to 170, 180. You never know about these things. Buy signal from the long-term moving average, but has a sell signal right now from the short-term moving average. Shouldn't put too much attention to this because it's just broken. We will see how the day today will turn out. So as is looking at the chart, it is actually a fair chance for Apple to continue upwards. If 160 is broken down, we should see a fall to 155 or 150. I said I expected markets to do a huge movement downwards that would bring also Apple down. Still very high relative strength index, but some stocks like Tesla love being in at the very high levels, just continue upwards. I'm very, very certain that Apple will go down. At the same time, we are in a situation right now where it's a fair chance that it will continue upwards before it continues downward. And that should be, like for the major analysis, should be the very first part of the week. It's so hard to say how high it will go. My guess is that there is a good chance that Apple can go as high as 167, but should fall by the end of the week. Last week I had a very huge target for, or let's say low target for Apple, predicting $146. It's really not realistic that it should fall to 146 this week, but I think that we will see a green start of the week. Then it will challenge the support at 160, and I think that it will end the week somewhere around 155. So being negative, but for the longer term, the stock is still in a very good shape, in a very good rising trend. I also told you this is just these few weeks ahead of us. Things has to change very drastically before the long-term picture changes. I think it eventually will, but right now we will stick to the trend. Let the trend be a friend. The stock is still within the rising trend. It's just in the upper part of that rising trend. The target for the week will be $155. So I will actually up my target a little bit, try to be a little bit more realistic this week. And maybe this will be the week where things really go crazy. We will see. Microsoft, I expected Microsoft last week to fall to $312, simply because there is not much support where Microsoft is. But Microsoft also held kind of good. Was traded all up at 343 at high. now is in the bottom of the trend. It fell just as expected, but it didn't fall as much as expected. It ended the week at $323. Right now it finds supports from the trend. It's within, like Apple, it's within a rising trend. It is at the very bottom of the trend. However, the volume is in divergence with the price, meaning that the price was falling and the volume was going up. And usually that indicates possible change. And what is the scenario? Well, the scenario is, because the relative strength index is also getting very low, RSI 14 is 34. So it's a fair chance that we will see, like in Apple, that the stock bounces a little bit up, but with very, very huge resistance at 330. It's unlikely, in my opinion, to see Microsoft continue upwards the trend. I think this will be the scenario. It will bounce up to around 330, then fall down and test the trend again, which now will be around 323. And I think we will see a break of the trend. And that we will get that huge fall to 310, where it will pick up. The trend will go from, I would say, strong rising trend to less strong rising trend. So we are not in a situation where we are totally heading into a negative trend. It's still far off from that. It's just signaling that the best is over for Microsoft as is. So last week was a target of 310, and I will keep the target of 310. The low RSI, as I say, indicate that we can have a rebound up. How far will it go? I don't know. There is a sell signal from the short-term moving average to long-term moving average. And if Microsoft doesn't go up today or tomorrow, there will be also a death cross in the stock. We spoke about this earlier, where you have these huge sell signals from the moving averages, where the short goes below the long-term moving average. And everything is indicating that that will happen, and it should push Microsoft further down. So for Microsoft, we will keep the target of 310. Let's see if we will be correct about that. And then there is Tesla. And last week, I gave you a thorough analysis of Tesla. I said that I would keep my target for 880 because I believe that's where Tesla will head. Tesla holding strong in the beginning of the week, but Friday was a bit harder. Tesla ending at $1,014. So it's really heading downwards, but still far off the 880 target. And I'll not recap or retell my trades in Tesla, but as you know, I went in 560 and I went out more or less on the top, expecting exactly what you see right now. But if you go to StockInvest.us, you type in Tesla or the ticker TSLA, you will see the chart and you will see what I see. On your right hand, there will be some gray bars. This is accumulated volume. How many people were buying and selling Tesla at the different levels? And that is, of course, interesting enough. But more interesting is below 1,000, there is really no support before 900. There was very, very few trades between $900 and $1,000. So there is really no people waiting either to sell or buy their shares in this interval. So usually you will see a huge drop if it breaks below. So if Tesla is not able to pick up today, we should see that huge fall. And I think that will be exactly what happened. The volume is going in the opposite direction of the price. So it doesn't find any support there either. And with just a little support, you have to have that very good market where things turn. I don't think it will happen. Look at NIO. NIO fell very hard last week. I think Tesla is up. And I think 880 will for sure be reached this week. Hopefully I'm wrong. If you're a Tesla investor, I will be wrong. But looking at Tesla and looking at Microsoft, looking at Nasdaq, well, look at the moving averages. The same thing is happening here. Very soon, the short will go below the long term. And you will have one of these very long-term sell signals. It's not just a week sell signal, it's even could be month signal. Last time Tesla had the buy signals, well, it was more than 3 months ago. And it stayed buy signals for more than 3 months. And, well, I think Tesla is due to a fall. And as I told you, And you just have to listen to this podcast. I bought Tesla 560, expecting exactly what you see. I thought that it would end at 8,900, but I enjoyed the ride up to 1,200 with trailing stop loss at the very end. And as I said then, and as I will repeat now, I might just go back in Tesla. I just want it back to the level where I think it will turn. 800 or 600, I don't know, but we will be there, and it might just be a very good buying opportunity in Tesla again. So for this week, could be a slight rebound up in the beginning of the week. Hopefully, if you're a Tesla investor, that will happen, that the trend will remain, the trend will be your friend. But always, when being at the bottom of the trend, you're challenging the trend. You don't want volume to be doing the opposite of the stock. It's usually not the signal you want, and especially what we see in Tesla right now, where no support below 1,000 before 900. So 880 will remain target also for this week. That, my friends, bring us to the crypto. And last week I said Dogecoin was a buying opportunity at 0.20. Well, it fell more than that, and is currently trading at 17 cents. But let's start with Bitcoin. And last week's target for Bitcoin was optimistic. It was 65,000. Very, very off. I've been more or less correct about Bitcoin over all these analyses, but lately I've been off. I was gambling that it would keep that support it had last week and continue up. I warned you 2-3 podcasts ago that there is no support between 55 and 50, that it can fall straight down to 50 very quickly if broken. And exactly that happened. Huge fall. At some point, I think I saw Bitcoin was trading at $47,000. Is currently rising a little bit, trading around 48, 49, if I'm not mistaken. But now it is way oversold on the relative strength index, and this should just be a buying opportunity. And you hear me say that I want volume to follow the stock, the crypto, the index, whatever it is. In this case, we can see, if you check the chart, we can see that there was a huge spike in the volume when crypto fell to 49,000. And this is what you want. You have that very, very sell-off. How do we understand the sell-off? Well, the volume has to be higher than usual in the chart. And if we check the chart, we can see that the volume actually we're topping. Volume is that blue, very nice color at the bottom of the trend. The bottom of the chart. You should learn technical analysis. It's a very nice tool. So I can really recommend you. It will help you in your trading. But we want exactly that. We want a sell-off. To me, it looks like it was a perfect sell-off at last fall. And there is a huge chance for a pickup. Now, problem is that there is resistance 55, 60, 65. So the upturn will be slow. And with that sell signals from the sell cross, that huge sell cross from the short-term moving average to long-term moving average, it should be a slower ride up. It should not be that super quick ride up. So be prepared for slow movements. And it will be interesting to see, will 60,000 simply be too hard? I am very positive to crypto, Bitcoin in special. I think that this is just a very good buying opportunity. When you deal with crypto, of course, you have to take the risk. It's just the name of the game. Myself, I'm betting it will go up. It will go up for this week, but not as much. I have to be realistic. I have to reduce my targets a little bit, but I would say by the end of the week, on Friday, I think that we should see Bitcoin back up at $55,000. If it continues to fall, of course, everything above will turn into more heavy resistance. So that will not be good at all. And then there is Dogecoin, and Dogecoin is, as I told you, it's a shitcoin last week, but there was a fair upside. The problem now is that with the last breakdown, also Dogecoin, more than Bitcoin, is changing the future forecast. But this is a crypto with very little trading. It moves very rapidly. It's currently very, very oversold. It's only 24 on the relative strength index. It should move upwards, but the target of 30 is, I would say, not within reach this week. I put a new bet on Dogecoin at 20, currently being in a loss. The last two trades was profitable, as you know. I think this will just be it. Will I buy a little bit more Dogecoin? I'm not sure. I'm thinking slightly now what will be the best idea. In general, I have reduced my exposure in the markets because this was exactly what I expected would happen by the end of the year. But for the week as such, I think, and I will keep a target to see Dogecoin go up to 24 cents. So 24 cents will be the target. And as a trader, because we are getting to the end of the technical analysis, we will head into the trading tips for the week, but we will just do a quick recap of the stock as well. Everything is indicating that we might have a fair, okay start on the week, but at the end of the week can be worse. So we see this is just the same like we see in the major chart for Nasdaq. Of course, many of these stocks are the big stocks in Nasdaq Chart, of course. But we see the same thing. We also see lots and lots of stocks are giving that huge sell signals from short going below the long-term moving average. It's a huge sell cross. Usually these things are quite reliable. When they happen, we usually see huge falls or huge gains afterwards. And you can, if you look at the single chart, you can see when it occurs, like does it last for 3 weeks in general, 5 weeks in general, 1 month in general. It will give you a slight idea what you can expect. What they're telling me is that we are somewhere in the middle of that very short-term fall, which we currently are in. So up for the beginning of the week, then most likely down for the ending of the week, and you would want to follow Thursday and Friday, where we will have the consumer price index number and the job numbers. And that brings us to the very last part. Trading tips. How did it go last week? And the portfolio where Arbutus were sold with very good gain. We will go straight to the trading tips. In this very last part of this week's podcast, we will look at the trading tips and the portfolio. And as I've been telling you a few times during this podcast, Arbutus in the portfolio did very well. But let's start with the trading tips. And for weeks and weeks, we did good trades. But in week 45, I bought UAB at 950, saying this will be a high-risk gamble that may cost a lot. Later, week 46, I got into Excel. And in week 47, 2 weeks ago, I bought Zoom. Last week, I told you I did not want to buy more because these positions were open. So I kept them open. I did not want too much exposure. And how are they doing? Well, UAB is almost a huge disaster. It is down minus 38.72%. And usually I never sit in a loss like this. But we know Omicron is here. We know that there will be focus on biotech companies. And knowing the volatility of UAB, well, there should be a fair chance to get the money back. It will not be a super duper trade like the previous trades, but we had that speculative trade back in UAB earlier, buying UAB at 872. It fell down to 470, then went all the way up to 17 and was sold, actually more than 17, was up at 18, but sold at 1710, doubling the money. Not sure that will happen in UAB. It might be a fight to reduce the loss, because usually keep stop loss, running stop loss. You have to do that. That's how we avoided the losses in the previous trades. We made them around 4%. We made our gains up in the 1820s, etc. Having a nice track. But right now, UAB is down 38% simply because I'm not following my own rules of running trailing stop loss. But I told you also that when I bought it, it will be highly, highly speculative. It might turn out very bad. UAB still in the portfolio. Trading tips. And if it was trading tips at 9.4, well, I think 5.76, which is ended on Friday, just below $6, is even better trading opportunities. I still think there is a trade to be made in UAB. Just be prepared. It's high volatility, it's high risk, but this is the one that will go very fast when it first goes. Excel was bought at 18.11 and everything was looking okay week 47, but then last week it was cut by stop loss at 17.05. I told you it was very close to be cut on stop loss, and it was cut on Monday by stop loss, giving a loss of 5.85% and being the 5th stock in all these trading dips that has been sold with loss. Correction, the 6th stock being sold with loss. And then there is Sumerica. Sumerica was bought at the 42 cents with the idea that it should be a good buying opportunity. But also last week that was sold on Monday by stop loss at 0.4050. So around 40 cents it was sold, giving a loss of 3.57%. So now 2 losses in a row. And that brings us up to 9 profitable trades and 7 sells right now. So that very nice streak, winning streak, seems to be off. So how can we redeem ourselves? How can we do something that will bring us back on track? Well, this is trading. I am hunting for small percentages using trailing stop loss. Have given the first, except UAB, all of them. As you can hear, last week Excel was sold 585 loss and Zoom 357. So we keep the losses low and we run the profits high. So we are still profitable in the trading tips simply because we have United Armor 14%, almost 15% profit. AMC last time we traded was 22% profit. So the profits are running better than the losses, like it should. In general, all I want is to be more correct than 50%. And following that simple thing, reduce your losses, increase your gains, be more than 50% correct, and you will be in the green. So how will I redeem myself? How will it be? Well, I will try DOCU. This is DocuSign. Was totally wasted on Friday. Huge fall. And I think this might be a trading opportunity to get into. It fell last week, it fell Friday by 42%. I think that's a huge overreaction. The volume was insane. Of course, relative strength index is totally in the bottom. I think it's a buying opportunity. It will be a volatile ride. What I will do, I already have my order in. It's waiting to be executed. I'm really hoping to get in somewhere around 135, 136 and play that risk game, because I think the rebounds can be very nice and that I can do a very quick in and out in DOCU again. DocuSign, ticker DOCU, DOCU, and that will be. So that's what is. UAB is still open. Now we buy DocuSign. Sounds more or less the same, but it's UAB and DocuSign. So we have these 2 trades open where DocuSign will be bought today. Hopefully around 135, 136 orders is in. Hopefully will be executed anytime soon, and I will be in the game seeing if we can make money on DocuSign this week. That will be the only stock in. As I told you, I'm very strict right now with my exposure in the market because it's not something I want. However, as the volatility increases, I will also increase my exposure a little bit, but it will be much more trading that you will not see, simply because I don't have time to keep an update in all of this podcast about all the trades I do. Sometimes I follow stocks for a very long time. I just find a very nice entrance level which I want, then in and out. I have several portfolios, and this is how we will end this podcast. We will look into that high risk portfolio which we've been following for almost a year now. and so much good gains, but there is a few stocks left. And I told you last week that I hope to close it by Christmas. And on Wednesday, something beautiful happened in Arbutus. Arbutus, due to some royalty news, you can read about it, is the use of their technology for the Moderna vaccine, etc., was really triggered, having such a nice rally, and went all the way up to, I think it was around 650 high. I was not able to get out at 650 because I was running trailing stop loss. The stop was sold, executed at 632, giving 78% profit in Arbutus. So patient paid off. We bought Arbutus 355. We sold it at 632, leaving 78% profit. So now we have Autos is gone, 94% profit. Zoom was sold 62% profit. Urenergy 95% profit. Exigam trade was sold at 96% profit. XPEV with 77% profit. We only have 4 stocks left. But they are in the red. It's Diffusion Pharmaceuticals, which have been trading on off. In reality, I'm actually still in plus due to all the accumulation I've done in the stock, buying and selling on. I was out at 180, I was out at 130, in at 70, back out at 120. Too many trades. I've been following this stock very long. Lately, it's been crushed by market. That happens with these penny shits. When markets are weak or bad, you cannot expect these to do good. They need that little solid push and then run wildly. I still think actually that diffusion will be, now with this Omicron virus will come. They didn't manage to play the real COVID game with their oxygen product, but maybe, just maybe, they now will be able to push some good news as Omicron virus will spread very fast through the world. May even turn into a new shutdown. We will see about that later. But I think it might be what happened last time we had this scenario, that diffusion might be one of them going up. But now it's in solid red. NEO, which was at 40 something, starting to look very good, fell like a stone on Friday to $32. So it's heavily in red as well. And then there is Petro Geoservice. It's struggling a little bit as is. That's Norwegian survey company. So this, and along with a pink stock, Velocity Energy, are the stocks open, but they will most likely be closed before Christmas. I'll do some evaluation as we go, but I'm not buying any new stocks into the high-risk portfolio. Simply because it's getting to the end. I will open a new portfolio that you can follow as I will evaluate how I'll get in. And I will end this podcast telling you how I've been doing trading for so many years. What is it and how do I do it? I try to figure out where is the market, what kind of situation is the market in. That decides how much money I will have into the market. And when market had that huge COVID fall and I started this podcast, I put more or less everything I had into the market because I knew from all my previous trading years that this was the buying opportunity of the century. It was. And as market moves up, you get the same scenario. Things get overbought, it goes too much. And I reduce my exposure into the market. So whatever happened, the markets can go to zero. Doesn't matter to me because I will still be in plenty profit because I've taken my profit and then some out of the market already. It's in the bank waiting for a good trading opportunity. Sometimes I go into other things. I had some in crypto now. As I said, I believe crypto might do very well. So I have some in crypto, but not too much because crypto is too volatile. But I still have enough. Now I am waiting for that trading opportunity where markets get totally crazy, where you get so scared, you just sell in your panic, down 5%, single stocks go down 30%, and you just rush off to sell your stocks. Well, that's where I will be when cash is king. I will be there and pick up some of your stocks and do these 5, 7, 8, 9, 10% swings. I'm just waiting for that to happen. That's the reason why the money is in the bank and not in the market right now, because I think that we are heading exactly to that scenario again, where there will be an amazing buying opportunity. Anyway, I wish that you are making good money, that this podcast actually helps you a little bit, gives you some ideas, help you a little bit with your trading, so that you continue to build profit. And remember, 1% is very good, 2% is very good as well. Don't be greedy, hunt smaller percentages, because the more percentage you hunt, the higher the risk you take. And with high risk comes high losses, is inevitable. You just have to have some strategies where you can avoid the worst of them falls. Above anything else, we are getting far into, not very far, but we are getting into December, and we're closing into Christmas. Remember to spend some time with your family. Stock trading is not everything, but when you have some time, try to read up. There are so many good books, there are so many good podcasts. Try to spend some time, listen, try to learn. And if I can give my personal recommendation, look at charts. Your brain is an amazing thing. By looking at charts, you will start to see patterns. You will start to understand much more. Things will make a little bit more sense, and that can give you that small edge where you buy at a better time, you sell at a better time. At StockInvest.us, you can train yourself doing some predictions. You can even see what kind of predictions I make every single day. And I made tons of them, trying to be as correct as possible. And that's it, my friend. This podcast is over. Have a very nice week. Try to make some green, and we will speak again next week. Bye.